Hello there. This presentation looks at the use of petty cash funds and how they are able to help the business in a multitude of ways. A petty cash fund is an amount of cash kept on hand to pay for minor expenditures. While the size and scope of a petty cash fund will vary across companies, the importance stays the same. This fund is useful to businesses so there is cash on hand to meet business expenses when necessary. It also reduces the need to go into the other accounts of the business, such as equity or any potential retained profits. The operation of a petty cash fund involves three main activities: establishing the fund, making payments from the fund, and replenishing the fund. The first stage, establishing the fund, occurs when the fund is needed by the business at the amount the business chooses. For example, if Titan Education establishes a petty cash fund on the 1st of March for $500, the following general journal entry will be recorded. As you can see, the petty cash is debited and cash is credited to balance out the accounting equation. The second phase involves making payments from the fund. When this occurs, no journal entries are made. Payments are made for expenses so that the business doesn't need to go into its own pockets. This can be of benefit to create more liquid cash as well as a more appealing financial statements. The last stage is the replenishment of the fund. A petty cash fund replenishment report is to be made, along with the respective journal entry. For example, if the cash requested equals $350, there will be $150 remaining in the fund. The receipts of the expenses must also be recorded. Therefore, the following will occur. The report shows the receipts in the fund, as well as the calculation of total receipts and petty cash. The journal entries shows what accounts are debited and credited, as well as their value, once again balancing the accounting equation. Alternatively, a cash short over example is a miscellaneous expense account used to record the difference between the amount of cash needed to replenish the fund and the total of the petty cash receipts at the time the petty cash fund is replenished. The following corrections are made to the petty cash fund replenishment report and the general journal. The report shows the same information, just with different values, and the general journal shows the inclusion of the cash short over account and how it is debited to balance the equation. Overall, the use of a petty cash fund is able to be effectively used by firms in order to have on-hand liquid cash to pay for small expenses. This is able to maintain other accounts as well as create a more positive image for the financial statements and the business in general.